Hey, what's up, people? All right, Ted here, Bodies and Wicks. We're gonna let. Wow, what a day! What a day! What a day! So it was something I don't think I expected. I don't think anybody expected it today. But we got a little bit of a comeback, right? A little bit of a comeback. Um, so we're gonna check that out really quick, and then I wanted to get into something I found out, something a new crypto, I guess you could say, a new system um, that I think is going to be definitely making some waves. If you haven't heard about it, then I want to introduce you to it, and we'll be doing that in just a second. So, um, first, let's go ahead and just head on over to the betterment of the day. All right, so let's just check out the market overall. We were pretty down when it came to Bitcoin and Ethereum. Cardano was still fairly decent at the time, as far as the beginning of the day was concerned. I didn't expect, and then just like, I don't know, I didn't expect a 12. I didn't expect it to be that to be that much, almost 13%. That was insane. So for us Cardano holders, keep keep on holding it together. Um, because I have a feeling Cardano is just getting started. Um, it's one of those coins that I don't know if it's been, like I said, and I've heard recent announcements of all the contracts and stuff that they're doing. Um, Maybe that's what it is. Whatever it is, they're doing it right. That's for sure. So, Bitcoin up 5%, Ethereum up almost 8%, a little bit more than 7 actually. And then down toward the bottom, BNB about 8, XRP jumped about 7, Doge nobody cares about. Um, Polkadot, actually, I'm surprised Polkadot's coming back this much. It's up 12% today. Solana, even though Solana had this huge run, and it had that weird day yesterday, um, it still came up a couple of percent today. And I think I got as high as 74 something. Um, yeah, look at this over the whole week, 74.34%. That was probably one of the best other than Terra Luna. So to this week, or I would say these past couple days, which has been pretty much this week, it's been a lot better, compared to last week. Look at the Polygon today, um, hitting 13%, almost 14%. Um, so yeah, it was extremely, extremely good day. Um, and Graph actually coming back up. Um, and the Graph's the one, actually a competitor of one of the new coins I found out about that we'll be talking about a little bit today. So that being said, let's go ahead and head on over to some technicals, especially with the main ones. Let's go ahead and over to Bitcoin. So what happened with Bitcoin today? As you can see, I always like to draw all my big old areas and stuff like that. So it started down here in the morning. I remember starting really low. Um, and it looked like, so if you draw a Fibonacci from this point here on August 6th, at about midnight, you have a low point here because you kind of have this dupe and then you have another little dupe, kind of thing. I would say draw it from here. Why would I draw it from here? Because the next big run breaks that high, right? So since it breaks that high, this is technically considered the low for the your Fib, or where you would measure a Fibonacci. So what happens is it comes down and it touches the 50. I mean, it's like, is it right on the 50? I mean, you can't get any neater than that. It's just sitting right on the 50. Perfect halfway pullback. Doesn't have to go back any further than that. I thought it may have pulled back further than that. Say I have it upside down right now, which I probably shouldn't. Let me double click this. Come on now. Back up. And let's do reverse. I thought it was probably going to come back down to here where it says the 61. And also one of the main reasons for that was because it would almost be, I guess you could say, support level. You know, near the support level of these kind of spiky areas, so it's actually more liquidity runs. So that's why I thought it was going to pull back just a little bit more, but it didn't. It came down at 8 o'clock this morning. It just, you know, it was like it was like a slow run. It was like a slow run that you noticed, but you didn't know if anything was going to happen with it until something finally happened with it, which was awesome. So it came up into the this one. I mean, I'm this 1 hour fair value gap, right? Actually, it's a 4 hour. I don't know why 1 hour. Well, actually, I think this is a 1 hour because the 4 hour is a little bit wider. And actually, let's draw the 4 hour here because I want to see if that makes a little bit of a difference. So I think it would with this little spike here. Yeah, so it runs right to the first time it runs right to the top of the 4 hour fair value gap, pulls down, right, and then it's sitting right on top of this bearish order block. Sorry, not bearish, bullish. I meant bullish. All right, so if we click this and we go to the top of that red candle, drag this all the way across, and then let's make sure the coordinates are the exact same. It comes down right to that. Which is pretty amazing. And I guess I accidentally deleted the fib, huh? Oops. That's okay. I know. Well, there we go. Why is it drawing backwards? Oh yeah, because I hit reverse on it. So no, wait, I didn't. Oops, put it at the wrong place again. Put it way over here for some reason instead of right here. There we go. That makes more sense. All right. So this 50%, I was wondering because I was like, that 50% was laying right on top of that bullish order block. So bullish order block, it lays right here. It's just a red candle, right? Actually, I don't even, you guys probably can't even see it. Let me get myself off of here. I'm a dummy. Big dummy. There we go. All right. So move this over. You have this candle, this big last down candle before the big move up. That is considered your bullish order block. So anytime the price is expected to come back down to it, it is expected to be rejected. Now, how can you trust that? First of all, you would have to be, well, price had been bullish for quite some time. And you would have to understand that there would be an area that price would be needing to reach to. Now, at this point, us drawing out fair value gaps and whatnot, we had realized that there was a 4 hour one here, right? If I'm not mistaken. Hang think that's what this one was. Hold on, let me hit text. Yep. Oh no, 1 hour. 1 hour one here, and that overlapped with the weekly fair value gap. So that's where I thought this was heading the entire time. Was toward the bottom of the weekly fair value gap, just like you saw it hit here and hit here, and then turns around, bounces back, hits the bearish order block, or sorry, bullish order block. I keep saying bearish for some reason. Bullish order block, and then continues up, and it runs even further into this. Well, for one, it runs out the 1 hour fair value gap, which is a very small region. So I think that's why it got up as far as it did. It wanted to clear out any kind of void of liquidity that was sitting in there, and so now that we have pulled back, and as we were pulling back, I was wondering how far we're going to pull back, or if we're just going to keep going forward. And luckily, we hit the order block again, and it just got reclaimed, and it hit again. Usually, whenever order blocks get hit twice, it's rare that it'll have that same reaction, but this one did. So this is telling me we're having some very bullish momentum in Bitcoin. On its way down, it created this big candle here, big red candle, created a 4-hour, I think I'm in the 4-hour chart, yeah, 4-hour fair value gap. I drew, and it looks like price had, well, first there's another 4-hour fair value gap. So this one got rejected out of, down to the order block. This one came up through it, went to the bottom. I mean, look, you can't tell me that there's not an algorithm in the smart money. This time the wick came right down to the bottom of it and went right through it, right? So, and right now we have went through, well, at first we just kind of touched the top of this, and actually this needs to be moved a little bit. Let me see here. Or does it? I feel like the 1-hour fair value gap may do it more justice. Yeah, it actually is the 1-hour fair value gap, because the 4-hour you're getting all of this that came down in here. So the 1 hour is the one that actually gives it a little bit more justice. So, and even then, the price came up to the very top of it. I mean, it fills it in completely. Yeah, I want to see what the height of this is. The high is 47174.62, and then 47175.39. So like that's less than $1. In Bitcoin, that's like nothing. So that's how close these algorithms get. And it's not just like some random number. It's literally the bottom of this candle right here to this candle. That's not your typical support and resistance. If it would have been your typical support and resistance, it probably would have been this candle or something. Because as you can see, you have 3 bodies here along with the wick, but instead it was this one. And why was it this one? It was because it created a fair value gap with this one. All right, so now it looks like we have run that one, ran this fair value gap on both sides, comes up, hits top of it, and this spikes through again. Spikes through probably to get anybody that was going short with a very, very short stop loss, cuts them off really quick, right? So now I expect the same with Bitcoin tomorrow, or overnight. Maybe a little bit of a pullback, maybe staying inside of this fair value gap area, but ultimately it is this weekly fair value gap that it is going to try to get through. right? And I'm gonna probably, let's style this a little bit different. So it has a little bit more of an opaque background, so it's not so yellow on my screen. But yeah, it's gonna try to fight all the way through that fair value gap. Why? Because that's what it does. Look at every other fair value gap that we've drawn. It has gotten all the way through it and then went back the other way or continued on. So, like I said, even with this one, it came up, hit exactly right here. I mean, who else would have, like, okay, if this followed the exact theory, that um, everybody thinks, or the retail thinks, that this is done by buying and selling pressure. Why would people start selling right here? What is right here that makes it so special to sell? You probably didn't make that much of a profit from going from here to here, especially if you have tons and tons of money, that you can continue to push the chart the way that you want it to go to. Wouldn't you want it to continue going that way? Yeah, you would. But it does do that. But first, it has to follow a certain algorithm, and that algorithm is controlled by PD arrays, right? Premium discount arrays. And this fair value gap is one of them. So it stops at the fair value gap, comes back down, hits another PD array, which is called a bullish order block. And then, boom, we have the push up, the pullback, and then just before it gets to it, finally we get to take off for the day. All right, so that's it for Bitcoin. Let's head on over to Ethereum. Same thing, pretty much. I'm on the hour here with Ethereum as well. Of course, I'm drawing fair value gaps, as always. We look over here at this side of the chart. You can see where this is the 1 hour. I believe this is the 4 hour. Look over here and make sure I got to the right way. I'm not speaking nonsense. Oh, it's a daily. Sorry, a daily. So this one's a full day of where, yeah, it looks like it would be about a day to an hour, to where there's a big gap in the middle. There's nothing happening. So that would be this one with the purple outline. Then you have the 4 hour, right? And actually, in between the 4 hour and the daily is a 1 hour fair value gap. So what happens to price here? It gets all the way to the top, right, to these fair value gaps, the top of the 4 hour. So it actually first, it gets to the daily. I don't know if you can see that or not. Pretty sure you can. The big purple line. The purple line is the daily one, right? So look, I mean, come on, guys. If you're not understanding smart money by now and understanding that it has like a perfect the algorithm, or it follows the algorithm to a T, I don't know what else to tell you, because it comes up here and it touches that daily fair value gap, that gap that happens in between those 3 days, touches the top of it just enough to reject it, right? So falls back probably a little bit more than halfway, which is fine. Generally, what happens, and actually, if we want to measure this out, I want to say that the body of that is about halfway through. I stand corrected. It's actually this body right here. So it drops down a little bit further than I thought it did. But anyways, so now it's moving on up, and again, the daily fair value gap comes above it. Now, again, like I said, these things act as magnets and repellents at the same time. They're trying to repel it out, but it's getting sucked in. So um, here it drops down, almost down to the for our fair value gap area, back up to the daily, and then all the way down to the daily, right? So not only does it hit the daily once, but it hits the daily twice on the bottom. Boom, boom, and then takes off again. And what? Right across here at the top, at this purple line, at the daily fair value gap, is where basically the resistance is, right? And since there is now kind of this resistance, um, there's going to be a lot of liquidity up here. Liquidity meaning that people thinking that as soon as it gets a little bit further up, or it's going to short from here. A lot of people putting limit orders in, or possibly putting in stop run orders, thinking that as soon as it gets breaks through a certain level, it'll pull back to that same level, act as support, and then take off, and it'll be like a break. They'll think to catch a breakout. But instead, what happens is it just barely gets through. So anybody that was going short here probably got their stop taken. And then it gets right to the top again of this 4-hour fair value gap. And then boom, drops again down to the daily. I mean, just watching this, it amazed me about how close it follows all of these fair value gaps. Drops again down to the bottom of the 4-hour, back up again to the 4-hour, and then back down to the 4-hour, up, and then now we're at the daily, and then back down to the 4-hour, and then down to the daily, and then down. And then here's where it got scary, is when, hold on, my mouse is not wanting to move. Okay, there we go. Below. And that's when I was like getting a little worried, personally, because I had been in a long, ever since I did want to say it was right in here. Yeah, this sounds right about right, because it says 7 in the morning. And I had looked and I had saw that there was this big spike down here. So this was the liquidity run. So this liquidity run came out and took down anybody who was short or who was long and had a short stop loss, right? It takes all those people out. So the next time it comes down to this area, I just went ahead and went long, because as long as we have been staying in here, I felt like we had to be going long at this point. There's really no other way to explain it other than that. So now we come up here again, and then I see we get close to the 4-hour, and then it falls back down to the daily, and I wasn't worried until boom, here last night, 11 o'clock. What's going on? And so I was worried when I went to bed last night. I was like, I'm going to wake up and we're going to be, way, way under, and, prices are going to fall. But we didn't. We woke up and still not much going on. And just like Bitcoin, it started, slowly started to show some signs of relief. And then all of a sudden, by the time, I think it was around my lunchtime, it just took off. And as soon as it took off, I was waiting for it to, and this what one of my friends was like, "Are we gonna hold this level?" I said, "As long as it can get above this area here, this candle here, and close above that candle, we're gonna be fine." And sure enough, with this candle, it got above it, closed above it, and then I saw the this would be a breaker block. So you have a high, a low, and actually I have it on the wrong candle. Be on the red candle. A high, a low, and then another smaller high, but it's still a high, right? It just slowly started getting through it, and another 1 hour fair value gap ran through that one really quickly, and that was good after that. Now, one of my friends just texted me about one of the coins I wanted to talk to you about. So those are the two main ones. Well, first, let's go ahead and take a look at Solana. Solana, again, had a wacky day, but still around the same price as it has been for the last couple days. So we're still doing good on Solana as long as we're in the at least in the 70s. We're doing good. Another one I wanted to look at a couple days ago, audio took off. I don't know if you noticed that or not. I've been in audio since it was like $1 something, less than $1. And today my portfolio was happy because I after the big, the kind of huge pullback that we had from every single coin, I had to think about my portfolio because I had so much stuff and it was scattered everywhere, and I had to think about the core things that were good, and really focus on good projects. And audio is one good project. It can change the music industry. Um, it gets past, Spotify pays crappy rates. Any kind of like streaming service for music basically pays the artist a crappy rate. If they want to host their music on Audius, they get paid in audio coins, and the more audio coins they're worth, the more they get paid. So, and the more people that this is especially good for up and coming artists who don't, they're self-funded, or they're a small, label, whatever. This is going to be their haven, because the big name people, they tour around the world like Beyonce and Jay-Z and Kanye and all those people. Even though they don't make their money back from record sales anymore, they make their money through what's called a 360 deal now, and that deal includes live performances. So, don't know if you knew that or not. I went to school for music business, so that was one of the things that I learned. So one of the things I wanted to talk about was Covalent. Don't know if you've heard of this or not, but I am not 100% sure what it is. But as you can see, it has supported blockchains right here, and it's every single big blockchain: Ethereum, Binance, Matic, Avalanche, Moonbeam, Polkadot, Starkwire, Elrond. I mean, it would from my understanding, what this does is it's kind of like a data aggregate. Like you have all these different ledgers and you know projects, I guess you could say, but how do you extract the data from it easily, um, to where it's not so difficult, and especially if they're interconnected, uh, data is key these days. Data is money. Everybody wants data. So that's what this is. From my understanding, this is supposed to be the competitor of the graph. Um, but this is supposedly also a million times better. Um, so if you go down to Covalent, it tells you what it is. 25 billion rich transactions indexed, including every transaction since Genesis for 6 blockchains. Wow. 200,000 smart contracts available with internal data structures for querying. Wow. 30,000 price feeds for fiat and crypto pairs. A 30-second refresh rate. So it is the monster of a system is what it is. And so if you're a developer, you can use this as well. And from what I heard somebody explain is that you can kind of use this copy and paste method or Frankenstein method if you like certain things about like one, you know, one project, and then you like something else about a different project. You can go in and find the source code from those projects and basically, take those codes and put them together for your own project. And so, you're not having to, even though you have the idea, and you can probably code it out, if you're one of those people that does that, you don't have to with this. You can just go in and find the source code, for what you like and just take from it, and then, you can put 3 or 4 things together. Next thing you know, we have a different coin that does something else, right? Who knows what these coins are going to do? I just now was learning about, what is it? That I think is going to be a really, really good coin. Um, Helium. Helium is going to be awesome. Helium is basically a coin that is going to make sure well, basically we like, like how you have a phone plan right now. It's basically going to be able to take that away and take away an internet plan or something like that. You're just going to pay for the data that you need, because we all have low radio wave frequency devices. And so as long as I think we're all connected, I forget exactly how it works, but we're all going to be transmitting these low radio waves. So since we have all these devices, it's just going to be basically it's going to be internet everywhere. And you can just pay for it right through the Helium, um, you know, website or whatever it is. Anyways, I'm getting off track here. I'm talking about Helium, even though that's a great project too. We should be talking about Covalent. So here it says, build using the API. You can create your own. You can build a wallet, aggregate historical balances, positions, profit and loss across dozens of DeFi protocols, build rich, compelling interfaces for your users. So this is like this is the platform for platforms. This is, this is developers heaven right here. You can create something. You can write a query here on Ethereum, or you can switch to Matic, or you can switch to Binance Chain, and then run the query after that. One API see your token balance. One API call to get the ERC20 NFT and NFT token balances, current and historical values, and dozens of quote currencies and currencies logos. Okay, it says Uniswap version 2 network assets return to a paginated list of Uniswap pools sorted by exchange volume along with swap count. Okay. liquidity token and reserve depth, historical token holders. So each of these has a query. This is interesting. Historical token. Reconstruct the state of any smart contract token to retrieve and historical token holders. Log events. Automatically decode event logs and write data types, including those emitted through proxy contracts. Make calls by contract address or topic hashes. Interesting. So yeah, I can already see this is like kind of a hash. Try it live. Let's see. I don't know. I'm just gonna click on it and see what it does. Yeah, this is definitely for the people that want to be making the smart contracts. Huh. I guess you'd have to have your, it says response as 401. 401 always means, bad gateway. I guess you'd have to have your own API. So this Covalent thing is supposedly the mothership of them all, right? Um, and so kind of here, like down here is the see live activity on indexing and coring operations. So transaction hash, I mean, it just has data, is basically what it is. Yeah, I think that's basically what the whole point of this was to aggregate as much data as possible, because there's so many now, there's so many different exchanges, and there are dexes, and there's so many different coins. How do we get all of the data that's out there and pull it together into one pool? And supposedly that's what this is for. It's supposed to be for the easiest use of data out there, while also, be able to create, your own, smart contract to retrieve that data, I guess. I don't know 100% because I am not one of those huge nerds. I mean, I do know how to code a little bit. I do know SQL. I learned, HTML, a little bit of CSS, tiny bit of JavaScript. But I am not somebody that could write, a cryptocurrency. To be honest, I could give me about a year, and I could probably write a cryptocurrency. I just don't know what it would do. Um, but here we go. It says our partners, over 300 projects building and succeeding with the Covalent API. So with their API, I mean, they got CoinGecko, Frontier, Shift, Reef, Balancer. And it says our early backers. Proud to build decentralized futures with our partners. Now this is what's interesting. The early backers. Coinbase. Coinbase is one of the early backers. So that just tells you where this thing is going. I mean, the actual token for this is going to go. It's going to be on Coinbase eventually. So if you want to get in, you might want to get in now, because now is where I show you what it looks like. And it just started right back in June. I want to say. It's fairly new. Let's see. There we go. There's the start. Of course, that's the start. It just looks like a big dropping ball of fire. 22nd of June. Yeah, for some reason they always start at 10 p.m. my time. I don't know why. It's so weird. So, whenever I looked at this, when I first looked at it from a monthly perspective, um, I don't know why a monthly perspective. It's only been 2 months. I think it may have been a daily perspective. Yeah. Yep, it was. Okay, so from a daily perspective, what I saw, especially today, was this. Um, and so I saw this, the last down candle here, right, as it was coming up, and then it pulls back just a little bit, and it pulled back right there. It's weird. It pulled back after it had already went through the bearish order block. But they both stopped at the same place. Hold on. Let me do a horizontal ray on that real quick. Almost at the exact same place. But if we were to take this to the top, it still goes just a little bit above it. Either or, it's pretty much, this whole green area is about the same thing as this one red candle. All right, so this red candle, boom, pulls back now for that one day. That is the bottom of the Fibonacci. I use that, and then next thing you know, that is August 8th. By August 14th, it makes its high. So less than 6 days later, or 6 days later, it makes its high of $2. What is that? $212.41. Now, keep in mind, whenever I go to, let's go to CoinMarketCap, and let's check out Covalent, just so we can kind of get a feel of what we got going out here. Max supply. That's 1 billion, right? 1 billion. Yeah, 1 billion. Total supply at 1 billion. So that's all we got. We are just now circulating 5% of this coin. And this coin is supposed to be the best data aggregator of all. So again, we're in the very infant stages of what could possibly be one of the biggest coins, or one of the coins. I shouldn't say the biggest coin, but a coin that has probably the most potential out of every single one out there right now. Like I said, the graph was supposed to be its competitor, but I never liked the graph from the start. I never did. And how I heard about Covalent is I have Gate.io as one of my exchanges. One of my referrals, like whenever you refer people on Gate.io, by the way, you get percentages of their uh, trades. That's part of the referral process. So, and they also get a percentage from me. So, if you sign up for me, I'll get some of your. I think I have it split 20-20 if I'm not mistaken. So if I go to Gate.io right now, I was just looking at some other things, but we can go to, let's just click Gate. And then my referrals. Yep, so I have it set at 20%, 20%. You can set it to, if you want 10% and they get 30, or if you want to be greedy and you want all 40% and they don't get anything, you can do that too. But I like to share with my people. So I'm 20/20 with both of mine. And usually, what I'll do is I'll get, you know, I can tell that that's just, some of my people that I've referred have traded, because I'll get a couple, it'll just be like little bits here and there, like 30, 40 cents of, a specific coin or something like that. And, generally what you can do is you can just kind of swap them out for like a gate token, and, let those gate tokens build up, and, you use those for your trading fees and whatnot. And but whoever purchased Covalent, and that allowed for me to have it on my portfolio, they purchased so much that it was 22 coins, that was worth about $30. So they had to purchase a lot for 20% of the trading fees to be $30. They probably threw in almost their whole life savings, to be honest. It's exactly what they did. So, um, that's what really got me intrigued, was whenever I saw that all that money somebody spent just for this coin. I didn't look too much into it until I got home from work. But while I was at work, I pulled got out trading view on my phone, and then pulled out, did a quick smart money technical analysis on it, and so measured the daily fair value gap right here, and pulled the fib, and then that's when I saw that whenever it came down, right, from its high, it came down right into the fair value gap, the daily fair value gap, also below the 61% line. So it is in the golden buy zone, also in the daily fair value gap, which is supposed to reject it. It does both things, right? So this tells me this is already institutionalized, that institutions already have a bunch of their money in this, and we're only 5% in. So, all right, now this is the daily. I want to take a look at the hourly, because at the hourly, what happened earlier today was that it was probably, this is 8 o'clock in the morning this morning, right? And it was somewhere around in here when I noticed it. And I looked at it and I said, okay. I said, it hit the low. I was like, it's coming back up. I was like, if it's coming back up, that means it's probably it has to break some kind of short-term blah 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 short-term high, um, before it gets to the next level. So I started looking for PD arrays, some kind of mitigation block, or breaker block, something like that. And then that's when I found it. I found the low, and there's probably a couple like this, but it's the candle that has the best volume with the least wicks is what you're gonna look for, right? So I could, you could have done it with this candle here, but this just doesn't look right because there's really no volume on it. But if you come down here and you go to this low, pull up to this high, and you look at this candle right here. Maybe it's just a full solid candle with barely a wick on either side. And that is the the highest candle in that area, right? That closes in that area. Even closes above this, it closes above this, even closes above this. So after the downturn, I guess you could say, it's the last candle that closes above most of that. The wick does close above that, above this candle. So this just told me that this was a bullish breaker at that point. So I, of course, drew a box from wick to wick all the way across. I said if it pushes through that, right, and then I see a return, and the return goes about halfway, I'm buying. And it's exactly what it did. Exactly to a T what it did. I want to throw another fib on this really quick to see if that was halfway. Looks like it's a little bit more than halfway. Looks like it was probably right at the 62%. Yeah. Still, I mean, almost picture perfect. So as it was coming back in, right, and I was actually doing work, but I was trying to keep an eye on what was going on, and the next thing I know, it just starts rising out of nowhere, and so I try to jump in as quick as I can. So unfortunately, I jumped in right around in here. I think it was 153. Let me see. I switched it over to, because I bought it, because I got it all on Gate, but I switched it over to KuCoin. Or I sent it to my KuCoin. I like trying to centralize everything. So let me see where exactly that. I honestly don't think it'll tell me where I entered. Oh, recent trades. Where's my trades? You can find them super easy in the futures, but I guess not so easy. Oh, you know what? I think I know what it is. I think I know exactly what it is. All right, hold on 1 second. Go to trading. Okay, order history. There we go. $153.02. That's what it was. And I think that was actually, I don't think that was my original place. I think that was, well, it was around the original place, but that's when I bought more. Because when I transferred it, it took 30 of my coins. So that's what sucked. So, and so that was right around here when it was dipping back down again. And whenever it did that, so here, let me get rid of this Fibonacci really quick. So it goes from here to this high, right? Starts making it come back down here, and it was probably right around here, wasn't it? Yeah, 15302. It's just a little bit above here. So I was trying to get it right at the 62%. Should have waited just a little bit longer. Waited till it came down into the bullish order block. I told myself to do it, and I didn't do it. Because if I would have saved a lot more money. Either way. Okay, so it pulled back, hits the bullish order block. Of course, this is definitely institutionalized. And now, boom, takes off again. We haven't hit a new high yet. It's gonna, I think maybe the British session is gonna be interesting. I think it's gonna screw with the Brits a little bit. I think what's probably gonna happen is it's probably gonna make a double high and pull back a little bit and then run through it. If we look at the history over here, we have two equal highs right here, right? And I think that's target number one, basically. That's going to be our first target. The only problem is that we're spot trading right now. I went to leverage trade, and there was no ability to leverage trade this on KuCoin just yet. Now, Gate won't let me leverage trade. They say it's illegal in the United States, but it's not illegal in the United States. You just can't have any leverage higher than, I think it's like 5 or 10% or something like that, which is ridiculous. I mean, the whole thing with Gate is ridiculous. Not the whole thing with leverage is ridiculous. So, because I wanted to come in here and start trading with some leverage with CQT, and so I bought at basically $1.50, $1.53. Should have been a lot lower. Should have been about $1.40 something. That's okay. It's okay. And now we are currently at $1.66. So, and we've already been to $2.12. Actually, it's $2 and yeah, $2.12. So that has been an early high, and an early pump run up. That looks like a lot of people probably made a lot of money off of. That got a lot of dummies to FOMO in, last second, and then boom, took a bunch of profit, let it come back down. Why not? Let it hit the daily fair value gap, and then now we're seeing it follow the same smart money protocols as everything else. So considering it's already following the smart money protocols, it's institutionalized, and we're gonna have to call it like it is. Yeah, as you saw on the website, the biggest people are backing this. Let's see if we do a 4-hour. Yeah, see, there's not even a. Right here is a fair value gap, but I don't like. 4 hour fair value gaps really don't mean much. Because they're usually when like right here, right at the bottom of something before it takes off and clears these highs. And so, like I said, even though fair value gaps generally act as, um, a magnet, it's going to pull price back to that area. It's probably not going to pull price back to this area because it's already, just jumped through this, these highs right here. It's already in a new trading, zone. Um, I don't see any reason why it would come back and try to even get in this 4 hour fair value gap at all. I do not see that. Let's go to 15-minute. Let's see what we see here. All right, so at the bullish, order block. I try to read the top of this here. So here we got a big spike up. All right, and what that usually does, right? That usually signals to smart money traders that it's not going to reverse just yet. The people that trade for what's the word, dumb money. We call them dumb money because they are dumb money. The retail traders will typically see a big spike like this at the toward the near of a top of a zone, and they'll see that as a sign of a reversal. Smart money will see that, and they're going to say it's probably going to keep going because what it did is it took that liquidity, right, and just ran out anybody who was probably either going to go short and had a short stop loss. And so that liquidity just ran up really quick, or they chased it. And that's what happens. A lot of people chase it. Whenever they see it run up like that, they think they're going to lose out on something. So that as soon as it gets, close to the top, they're going to buy. And then as soon as they buy, boom, pulls back down, slowly fades. And so what are they forced to do? Do they want to stay in the trade? No, because it's going the other way. They're going to chase that now too. So then they sell off, what they lost, and then they sell with this, and they think it's going to keep going lower. Well, they don't realize there's a bullish order block sitting right here waiting for it to hit. And that, again, that bullish order block came from the hour. And now it's, it's created a 1 hour fair value gap. We'll have to see if it's going to return to that or not. I think it will. I think what's going to happen now that we know that this is definitely an institutionalized chart, the algorithm in here is going to play as such. So I think we're going to make double highs, right? Double high is going to get retail traders into thinking that that is a zone of resistance. So the next time it gets to that high, they're going to be prepared to have sell limits near there with probably short stop losses because they don't think it's going to get too much higher than that. Or they're going to go the opposite way and they're going to have a buy stop through there, thinking that if it buys through it, then it's going to come back and touch the top of it, and as if it were some kind of support level, like that, and then they're going to catch a breakout, and let's actually move that over here. That's what these retail traders think, right? When in action, more than likely, like I said, what's probably going to happen is it's probably going to take, a little bit higher, but it'll probably create an almost even high. It will pull back. And now when it pulls back, I actually want to get to the hour. So I said I drew this fair value gap on the hour. I drew both of these fair value gaps on the hour, and they're both pretty much connected without any wicks. So it's almost like it's one candle. So what I would think would happen would this would come right to the middle, right? Had the halfway point, because I mean the halfway point of a fair value gap is more than likely where it's going to go. Well, or hold on, we're going to get one more rectangle in here. There's fair value gap. That's the top one. Or what's going to happen is it's barely going to grace the top of it and then take off. That I think is more like it. But it's probably going to take quite a few hours for it to do that. And why is it going to take quite a few hours to do that? Because it's going to rub up against this top for a while. And it's going to go back and forth quite a few times, because it's going to make people think that it's going to sell, and that for some reason there's people trying to buy through it. But instead, people are going to be trying to sell. The retail people always try to sell the top. So instead, what's going to happen is it'll start selling, and then people are going to start chasing it. That's it. The waiters, there's going to be some people that are going to wait. They're going to wait to see what happens, right? They're going to wait around just a little bit, and then it's going to start to drop. And then as soon as it hits this top of this fair value gap, I guarantee you it's probably going to turn around and burst off and go through the top of that. Why? Because the top of here is liquidity, right? So liquidity is where all those market orders are sitting, right? As soon as the price crosses that line or gets near this line, it's going to be flooded with market orders, right? That's when all the money is going to flood the market, right? And a lot of it is going to be short money, probably, or trying to get out, taking profits at that point, because they're going to think, okay, this is the high point. I'm going to take my profits here, and then I'll wait until it bounces back to somewhere lower, and then I'll buy again. But instead, it's just going to go higher, and because the people that actually run the algorithms, the people who actually have all the money, know what the retail traders are thinking, because they don't have that kind of money to trade with. The people that have deep pockets are just going to control this chart the way they want it to, and that's how they're going to control it. Anyways, that's Covalent. This is again a fairly new coin. Just came out in June, late June. Again, I just found out about it today because of somebody that one of my referrals from Gate bought so much of it that 20% of the trading fees was 20 of the coins. So I was like, that it has to be somewhat important, right? So I looked into it, and sure enough, whenever I looked into it, let me see here, you got the people that the earliest backers are Coinbase, Mechanism Capital, Hypersphere. I mean, these are huge names. So I mean, but Binance Labs, come on. If Binance Labs and Coinbase are the earliest, backers of this, oops, didn't mean to do that, then that this coin definitely has something behind it. And I'm excited to see what's going to come out of it. Like I said, it's a data aggregate. It's supposedly It's going to be pulling data from every single um, blockchain out there. So here you go. Here's all the supported blockchains: Ethereum, Binance, Polygon, Avalanche, Moonbeam. Supposedly, it's the smartest of the smart. Um, and for it to just, you could just tell I guess they just didn't have the marketing in the beginning. Um, I wish I would have caught it at 34 cents, that's for sure. But for it to go from August 8th, around 50 cents to a week later at $2.12, this thing's gonna be a beast. Um, but like I said, next target again, where these two highs are, that's the next target. And it's funny because it's just below where it's going to create another double high. So it's going to create another double high to try to break these two highs, because then again, these people, the retail traders, see these two highs as a resistance zone. So they see one resistance zone, they see two resistance zone, they think sell, sell, sell. Whenever I see that, I'm thinking buy, 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 because there's so much liquidity in this area that the people with the deep pockets want all of that liquidity released into released into the chart. That way they can take it for themselves. And they'll do it, and then once it's out in the open, then the chart's going to act a little squirrely, right? But if you just hold on to a buy, you'll probably get through it. And then who knows? I don't know. We may even make a new high. That wouldn't surprise me at all, because people would not expect it. Because this thing has 1 billion coins, right? So 1 billion coins, finite amount, no more than that, right? I believe that's where I found that on here. Yeah, let me see here. Yeah, right here. So total supply, 1 billion. Circulating supply at 5%. We are nowhere near the potential that this coin has. And it's been on here a couple months, and it's already it was at 425 earlier today. And it's made it to 418. So this thing's going to jump really quick. This thing's going to catch attention really quick. And I just wanted to say I warned you. That's all I gotta say. There's not many coins that I found that I've been like, nah, that's cool. But this is definitely one of them. This one, of course, Solana was one of them. And of course, we see how that one is right now. That one's still, what is it, at 30 or 70 something dollars? 72. So I've been calling 82. I've been saying it's at least gonna hit $82 before a big pullback. But it hit 80 the other day, didn't it? Yeah, right at 80. So maybe that was my call. Maybe it hit 80 and maybe not 82, but I'm not for sure. But anyways, I have to get off it. Well, do I feel like doing another TA of another coin? What should I do? What's up, Evan? Yeah, I saw REQ was doing some pumping. Or I mean, everything's been pumping today. It's let's take a look at REQ. I know it got down to as low as like 23 cents maybe a couple days ago. Yeah, okay. It's at 37 now. Not bad. This one's been out for a while, right? I want to say this is 2018 is when this got released. But I think it just now got carried on Coinbase recently. As you can see, the high previously has been at 48 cents. I am on the 5-minute. Let me get off the 5-minute. Come on now. I should be on the hour at least. I still don't think it has made a top yet. Let's look over here. It's okay. So we have a bearish order block right here. Yeah, it's probably even higher than that if we look at the 15-minute of it. Yep. Right there. All right, double click on that. Coordinates. Boom, it's right at the top of it. It's going to bounce off of that top. So that is your bearish order block. That is part of the algorithm here. So there is your last. Actually, it should be right there. My bad. It's going to be your last up candle before the down candle. Not the one with the wick. You want a candle with a body. As you can see, it already came up to it and hit it once. So there is your clue. Okay, so we're reaching a little bit above it. This thing is pumping like mad right now. I just wonder how much longer that's gonna that's gonna live, because we are. I always look to the left whenever I do my charts. I look to the left to try to compare it to the other one. If anything, we'll probably get close to the top of the red, the first bearish candle. Oops, wrong way. And that may be your stopping point just below that. Still going. And then boom. As soon as the quarter hour hits, it takes a dump. And a very large, fast dump. I'm interested to see if there's any other coins that did something like that. I mean, we were watching Covalent. It didn't do anything like that. I think we took a look. Let's see what audio is doing. Audio is just chilling still. Audio will be one of those things that will change the music industry. I just can't believe it went from here to here in a day. What was it? $1.60 to $4 in less than a day. And I had that on quant trading too, so I made $200 in Tether just from being invested in this that day. It's crazy. Going back to request, yeah, I think it's done for it. It came up, it hit the, got about equal with that bearish candle, that first bearish candle. And look, this is number one indicator. Smart money's in the room. Look how flat top that red candle is. There was no wick. So as soon as it turned to the 50, as soon as that 5 minutes was over and it flipped over to a new candle, it was sell. Boom, automatically. There was no buying. There's no wick on that whatsoever. If that doesn't tell you that this thing is not ran by an algorithm, I don't know what else does. Because if this thing is truly controlled by buying and selling pressure, you would see a wick on that. But you don't. You don't see a wick on it. And there's plenty of those. There's actually, if we go to what I found interesting is that it's on, I think I did it over this one, but that's okay. Let's go back. It's not an Ethereum. But I mean, Ethereum, you have, what's interesting about this one is you have, if you look to the left, all the way to the left, whenever you get, the sky is falling, right? You have a daily order block, then you have a 4-hour order block, and then in between, and then right in between those two is actually a 1-hour order block. And what's interesting is that how this thing just follows along with each of the order blocks. No, yeah, the order blocks. So, I mean, right there, this one right here, just touches, barely touches that daily order block before it finally pulls back. Then we get above it, then we get it does it again, Dune touches that daily order block. Then we get to the bottom, daily order block, bottom, daily order block. And then right here, the 4-hour hangs out for a second, finally gets out of it. And then here you go. Here's the, now it's at the top of the daily for the entire time, and boom, finally, and then the 4-hour block. So this thing just follows the overlapped daily and 4-hour four-hour order block the entire time until recently, and I wanted to see what was going on with it recently, because now you have a 4-hour order block here. Okay, it breaks through the top of it. And pulled back down in. Here you have a 15-minute order block. It touches the top of it. Almost. But I don't know, whenever this candle closes, it's probably going to close outside of the 1-hour order block. I can almost guarantee you that. Just because these order blocks, they're so odd. They act as magnets, but they act as repellents at the same time. So sometimes they'll just stay inside of them forever, and that's the consolidation phase. And then once it's full, I mean, from top to bottom, both ways, then it's done. So it should probably end actually right here. But what I wanted to look at was actually Solana USDT. If you look at the daily on this, right here, this candle right here, and it's on every chart, the flat top of the daily. And with as large as fair value gaps as Solana has on its way up, it scares me. It scares me. I'm not gonna lie. It scares me because I know it's gonna come back. It's gonna come back, and it's gonna come back to at least this 45. And once it hits this 45, then it's finally gonna go back up. But until then, I am gonna be worried about any kind of flash crash or some kind of drop. And my proof is generally I tell people, hey, look at Tesla Day from Bitcoin. Whenever it just took off, that chart took off. Whenever Tesla announced that they were going to be accepting Bitcoin and Bitcoin was in their reserves. Let me go to the day. That was back in February. Right. I'm in 2021. Or not. I'm not in 2021. I am in 2019. Here it is, this area right here. This was Tesla Day. Whenever I saw that, it was like it's gonna come back down. And it did. My call was 55, I remember, on this. It got to 55,000. I sold, and then I held until it got down to the bottom of the monthly fair value gap right here recently, right around 29,000. And I bought again, and then it took off from there. So again, these fair value gaps, people don't pay attention to them. People don't know what they mean or anything like that, but you've got to, because if you don't, here I'm gonna. This is the fair value gap that it was in recently. So that was the month of January. Considering it just bought and bought and bought, and it left basically a whole candle with no wicks to touch on either side. That's what's called the fair value gap. And then what happens after that is they act as magnets. So eventually it comes down to the bottom of that. Or I don't even know where I'm at right now. Okay, here we go. There's the weekly fair value gap. There it is right there. So that same monthly fair value gap right at the bottom of it, and then takes off. So always pay attention to your fair value gaps. Any kind of PD array that you come across. But unfortunately, I have to get off of here. I work at 6 in the morning, and it is 11 o'clock. I got to be getting to bed.